Welcome to my channel, guys. Let's welcome Gary again. Because sorry, I screwed up the studio last time, and appreciate Gary's patience. And for his, for his level, he probably shouldn't come twice.
That's all right.
And I really appreciate that someone like Gary got a dinosaur of experience and still very patient, and then coaching all his builders friend how to become better builders.
Yep.
And builders become a very tricky selection now in the market, both for the developers themselves, people who want to get in developments, and even builders themselves if they want to consider to start or continue the business.
Yeah.
So today we have Gary. Let me introduce Gary a little bit. Gary is the founder for one of the very big insurance company specialized for builders, and also providing the builder's warranty for their business. And Gary got 3,500 plus happy builders customer at the moment.
Builders, trades, developers.
Yep.
Everyone in between. Everyone in the property and construction space.
So here's the tricks. If you are the builders and you want to start a builder career and business, and you want to select a insurance company can provide you the right guidance and right level of insurance and ongoing support, Gary can be the go-to person as your mentor. And also for the developers who have the fears to step into the market, it will be your advantage to win Gary as the professional advisor on your side, because that's when I was impressed that, actually I can go to not just QS, not just a lawyer for builder contract, but also a insurance broker for builder, because they have the secret data, and the connection and the whisper in the industry. They know some of the builders' reputation. They look at 3 years financial and all that. So we get into more detail on that. Tell us a little bit about yourself, your company, what you can do for your clients, if I haven't,
sure.
covered those.
So my name's Gary Sim. I'm the founder and director of CCM Insurance Group. We specialize in builders, property developers, and anyone in the property and development game and construction game. So we look after builders predominantly, and that's what we're known for. Our main business is looking after builders, and what we're known for is the home warranty insurance or domestic building insurance. That's the insurance that the builders need to build your project, and they need more and more of that to do more work, and that's what we specialize in, and helping and providing advice to them on how to get the insurance and slowly grow their company.
So when you mention slowly grow, that means that the builders need to prove themselves this year in order to ask for more limits for the next year.
Yes.
And what do they need to provide to demonstrate that they are ready, they have the capacity to take more jobs?
So there's a lot of documents that we need, but predominantly what they focus on is they look at your financial strength. So the financial strength of the company, as well as the directors of the building company. They look at your expertise, and they look at the rate of growth that you're trying to achieve. And essentially, those are the three, from a developer standpoint, those are the three, or a client standpoint, those are the three areas where a builder is most likely to fall down on or go bankrupt for. Either run out of money to build, don't have the expertise to build the type of project that you want them to build and cause issues and lose money along the way, or they've grown too big, but they don't have the infrastructure or the expertise to manage a company of that size. So the step-up approach is where they essentially want you to do so that you can slowly grow into the big builder, as opposed to going from small builder to very large builder overnight.
In the industry, I find that it is almost very common to see where people try to squeeze the price. So they go to whoever provide the lowest price. And sometimes those contact doesn't have the license themselves, so that they borrow the license from another company or another retired builder who couldn't care anymore, just get the money out of it.
Very common.
Is that compliance, or is it just can't stop this kind of things going on?
There are rules against this, and the laws against doing this sort of things. Unfortunately, people will get around that and try to do it. The whole reason for that, and the whole reason why there's laws around that, is because you want the registered builder to actually be the person that's building your project for you, not someone that's piggybacking off the license. not the right way.
I was surprised when a lot of my clients come to me and they, hey, this is my builder. And then I was doing all these background check on behalf of the bank before I submitted documents to the bank. And I couldn't find the license under their name. And then when I asked who's the owner, they are not even employee relationship.
Someone else,
Yeah, someone else. Like where are they? I called them up. They know this project, but it seems like they are not involved at all. So how can a consumer or first-time developer be aware of this and then do their own diligence check properly?
So you'll sign a contract, and sometimes you should be signing the contract with the builder. So in the parties to the contract, the builder should be the builder that you're talking to and you're signing the contract to. When you get the insurance, that's the other part that you can check, because the insurance will show all the details of the contract. Got to make sure that the insurance, the name of the builder on the insurance, matches the name of the builder on the contract, and make sure that the person that you're dealing with is also the builder or works for the builder or is part
Just
of
make
that
sure
builder.
that it's not their cousin or their family friend,
Yeah.
or at least their director relationship.
Yeah.
So what's the selection criteria you would say from your decades of experience? If you were to select a builder, what would you look at predominantly?
I think it's not always about, like you said, not always about the price. Obviously, it's very tempting to go the cheapest price. You pay less, you earn more. Obviously, not the best to go the most expensive price, but you pick the person that you believe you can work well together with. Because at the end of the day, you're going to work together for the next 12 months, 18 months. You want to make sure that it's someone that you can get along with, someone that you have a relationship with, especially if they're building your home. You don't want problems with the person building the place where your family will sleep and live. If it's a project, you're looking to make money, you want to find someone that you can work with. If you want to make some changes halfway, they're flexible. If they have to make changes, you can be flexible with someone you can get along with. I think the relationship is very important with the builder and the client.
There are a lot of builders going bankrupt every month. I forgot the exact numbers, but more than hundreds at least.
Hundreds, yeah. I can't remember the exact figure, but
but when I hear the number, in fact, I was shocked.
It's quite scary.
Yeah, quite scary. And so where you see the main problem with the builder, they going wrong. Like when they take so many jobs, they have the expertise, they have 10, 20 years experience, but they still fail the business.
I think a lot of it came down to COVID.
Yeah.
Prior to COVID, everything was okay. People were making money, maybe not as much as 4 or 5 years previously, but then COVID happened, jobs slowed down, material prices increased, and a lot of the builders were stuck in fixed cost contracts with the clients. So those builders that weren't able to negotiate with the client and the client weren't willing to negotiate with them, they're the ones that essentially found themselves in a lot of financial problems, because they're absorbing all these increases in costs, 30, 40% increases in costs. There's no way to recuperate the funds that have to come from their own pocket, which is why I talk about having the relationship with the builder so you can be flexible both ways, give and take, push and pull.
Tell us a little bit about your development experience and how you're enjoying it.
These days, I see myself more as investor than really developer.
Yeah.
We started, like most people, residential projects, then moved to commercial, pretty much stuck in the commercial space now. For me personally, and everyone is different, everyone's position is different, I find commercial works best for me. Even though there's still plenty of money to be made in residential, for me at least, commercial makes more sense for me, because I'm investing in long term. It's more.
What's the main difference between residential and commercial from your experience?
Funding.
Yes.
Funding. So, residential, as you know, you can get quite a lot of funding. The LVR is pretty high compared to commercial.
Yeah.
Commercial, that point of entry is a little bit harder.
Yes.
Which pulls a lot of competition out the market.
That's right.
So, especially a lot of the people that are listening, watching, if you got money and you got access to cash, I think commercial is a really.
You have less competitors.
Less competitors.
But that also require more professional expertise, guidance.
I think that comes down to choosing the right builder, right? I've seen a lot of residential builders try to do commercial, and I've seen a lot of commercial builders try to do residential.
Doesn't work.
Doesn't always work.
Doesn't always work.
Sometimes you better stick in your own lane and do what you're good at doing. That's why again, selecting the right builder is always the key.
Do you know any builders who successfully manage both residential and commercial sites?
Oh, absolutely, absolutely. A lot of the tier 1, tier 2 guys are very proficient in both. Unfortunately, as they grow, they realize a lot of their money is going to be made in the bigger projects, so they drop out of the residential projects. But I see a lot of sort of second, third tier builders that are doing all the high-rise type stuff, actually dropping back and doing more residential.
Because it's different timing of the market, different market condition,
That's right.
different demand.
Yeah.
So it's hard to survive with just one niche.
I think the bigger the builder, the more diverse they need to be. But I think smaller builders need to be more specialized, a bit more boutique.
Yeah.
Find a niche and stick to that niche.
Yeah. And Gary, would you mind sharing with us a couple of project experience you have, the achievement you made, or the mistake you love to share? Hope we can avoid it. Recent one or first one, the most successful one.
I think I'm pretty lucky in that sense,
Yeah.
right? Because my partner is the builder, so he looks after a lot of the things. But if I can share some of the experiences that I've been involved with developers that have got in trouble, most of the time the builders, the developers that get introduced to me, unfortunately get introduced to me when they have lost on their first project or when they lose on a project. So when they come to me, I always ask them, why did you select this particular builder? And the answer always is, most of the time, he was the cheapest.
No other reason, yeah.
Most of the time, when I speak to the developer, they got in trouble and they chose the cheapest builder. That's not to say the cheapest is the worst, right? I think a good builder can value manage down to the cheapest builder. But if the cheapest builder is saying they can build the full specs at a price that's value managed by a good builder, there's got to be questions asked. And a lot of times I'll ask, how were the other prices? And they go, builder A was 2.5, builder B was 2.6, and builder C, which we chose, was 1.9.
That's a big difference.
That's a big difference. If the two other builders were so close, that should be probably where the price sits.
Speaking about the cost, the builder have to make money and everyone have to eat. So you mentioned something in the past where the insurance company actually assess the builder's company's risk associated with the profit margin when you're going through the financial.
That's right.
Can you tell us a little bit more about it? Like what kind of margin is fair? In the market, mostly we hear 15% should be the right margin, but a lot of builders, they try to be very, very competitive as well, so they don't always get that.
Yeah, I think a lot of new builders try to win jobs for their portfolio. And in order to win the job, they try to pull back the margin as low as possible just to win the job. I think there's danger in that because if you end up losing money on that first job, second job is just to pay for the first job, third job is to pay for the second job, and you're just playing catch up all the time. I think most builders, they end up with around that 15%. But in order to end up at 15%, you need to be quoting it at probably about 20% because inevitably things go wrong on site. And a lot of those things can't be recuperated. You just got to wear the loss. So builders that quote at 15 generally end up at 10 by the end of the job. My rule of thumb, always 3 to 5% can be lost very easily on jobs just from mistakes.
A contingency.
Yeah, just from mistakes. Yeah. It can happen. So I think when I speak to builders, I always say, charge a fair margin for the work that you're doing. To me, I believe fair margin is 20%.
Yep.
My partner, who's the builder, he'll charge 20% on every job, and it's fair. The builder has to make money.
If they are efficient and accurate, then that's the money they deserve
Absolutely.
to keep.
Yeah.
But if the margin is like 5%, you see that on the builder's balance sheet and the profit and loss all the time. Would that be an indication that you're not confident enough to increase the insurance level for next year?
It'll be an indication that something might be wrong,
Yeah.
right? And we need to look deeper to figure out what is wrong. Sometimes the builder might be cash flowing his own project, his own family home through the business, so the margin will get decreased because he's paying for the cost of building his own house through the business. But yeah, as a general rule, if they're only building for clients and the gross margin is only 5%.
In your business, there's a lot of builders and developers coming to you for advice.
Yep.
What kind of particular like exercise or advice you work on with those clients?
For builders, most of the builders are coming to me asking to get them either cheaper insurance
Yeah.
or more warranty insurance
Yeah.
so that they can grow faster. So, like I said, cheaper is never always the best.
Yeah. You cover less thing.
You pay for what you get most
Yeah.
of the time. In terms of helping you get more insurance, it's all about the paperwork that they can provide to
They
me.
need to demonstrate the experience, the efficiency.
That's right, and your financial
the reference
strength. Sometimes.
Yeah.
But
Actually, what Gary goes through is very, very detailed and thoughtful, because you ask for 3 years financial.
Yep.
You ask for the bank statement. You ask for the management account.
Yep.
And you also check to call up and check the key person to do the reference check.
To a degree, and then we look at all the projects that you're doing, where the project's up to, how
Yeah.
quickly you're moving the projects on.
Yeah.
And then, that all forms part of the assessment for the builders.
For a small developers going to a builder, they're doing like 3 tiny or less. The banks don't even ask for those financials for the builder. They just whoever licensed builder they can do. But for 3 or more units or a certain size or commercial, then the banks or the lenders, non-bank lenders, they will come in and ask for the same thing.
They want to
3 years
assess the builder
financial
as well.
But they probably ask less documents than an insurance company.
Yeah.
And for the builder, if you don't give them 20 jobs, they probably are very reluctant to give you their financial. So how good is that to have the insurance company on your side to pre-fill and select and even recommend a few good builders to you, and then you can select at least this bottom line protection. This guy get recommended, or they have been done their due diligence in a very, very professional way, and information advantage is something that we just can't get.
Yeah, I got to say that obviously there's privacy laws like we all have to have. So I never tell anyone
how much profit they make,
what the builder profit is. But most of the time, developers come to me and they ask me, "Hey, do you know any good builders in Doncaster that can build me a townhouse?"
Yeah,
and straight away, I might, off the top of my head, I might know 2 or 3.
Yeah,
then I'll drill down.
And it's also very regional focused. Like a good builder in Doncaster may not necessarily be a good builder in Mornington.
Yeah, they know the market. The good builders know the market, right? Yeah. So they know what works in the market. They know what, let's say you're building an investor stock sort of product. This is a prime example. You're building an investor stock sort of product. You've gone to a high-end architect. The architect spec'd it out as a medium to high-end spec. A good builder will be able to come and look at that project and say, well, look, you specified X amount of things, 1, 2, 3. All these items are extremely expensive. We can find equivalent ones that look the same, still meet your design intent of your architect, but we can bring the price down and bring the grade of the materials down to an investor level in that particular section. Because investor grade stock in Doncaster is very different to, let's say, investor grade stock in Tarneit.
Yes. So it's a better value management as well.
Absolutely.
Where the builder can help you save on the unnecessary cost and also the time and efficiency.
And the good builders are the ones that know how to value manage properly, right? That's such a critical thing, and that's where the locality and the expertise in the local regions is good when you're picking a builder, because a builder from the western suburbs may not know what can be value managed in a nice eastern suburbs home.
So it's really coming down to the old saying, it's about who you know rather than what you know. Yeah. Many people know, this document you need to check, but they can't get it. Yeah. And it's about who you know a well-connected person in the industry where not usually market accessible, don't have the time to do marketing because there's enough jobs in your hands, and to get the right guidance for not just the first or 2 project, but every project, because the market condition change all the time. And then a lot of good builders, they retire, they pass the succession plan to others as well. Yeah. Or some good builders companies separated.
Or some good builders might be good on that first project and then not so good on the second or third project.
Consistency as well. Gary, you see so many projects, so many developers, and you see they progress their business and career. So what's the traits for the smart developers? What kind of character they have or mindset?
For the developers?
For the developers, yes.
I think the good developers are the ones that are a little bit more innovative, a little bit more creative in the way that they're looking at the projects. in the past, a developer can just buy the land, chop the land up, build some townhouses, sell it, and you're almost guaranteed profits. But now property prices are still quite high, despite what the market says. The property market, in my opinion, I don't know about you, is still strong.
Yep.
Especially in the eastern suburbs. I think it's still very strong. So the good ones are able to look at a property and try to find value in that property.
The highest and best use, different views on that.
Yeah, try to draw the most value out of that property, because in the past, most developers just want to chop up the land, build the townhouse, and sell it. And that worked really well, in 2012, 2013, that worked really well. But I think nowadays, it's just try to be more creative, try to think outside the box. It's not just about ramming as many townhouses into a site as possible anymore. It's about, how you can utilize that space to draw the most value out of the land.
A lot of developers live on developments. So I feel the anxiety from the market now, where a lot of developers, they want to develop to make profit.
And the cycle of buy, build, flip, which I think for me, it's very stressful. I think it's just really stressful. But I think if you had for me, I think it'd be good to have a good balance of build to rent and the flip. And I think that's the big trend that's happening now, is that build to rent space, where once you have the premises or have the property fully tenanted, get it revalued on the rent, and then you're sort of drawing equity, you're sort of drawing some money out of the sale.
You're building your own asset, you're building the cash flow as well.
Yeah.
Not just selling, because that's going to pay a lot of tax.
Yeah.
And the stress.
Yeah. But then you use the revaluation money to spin off into the next project.
Yep.
So.
And back to the insurance part, I'm still very curious. At what circumstances would you stop giving the premium to a builder?
Okay, so it's the insurance company, which is the VMIA, which is Victorian government. They're the ones that will make that decision, but they generally make that decision if they think that a builder is not trading solvently anymore. So if you're insolvent, or if you go bankrupt, or if you've got some sort of negative adverse history, something like court writ or something like a credit note against you, that's when they can say, stop, let's assess you, let's see how you're operating, and then hopefully give it back to you again.
Yeah. So would they say they have a lot of complaint from their staff, from their clients, a lot of disclaim or lot court against them?
Yep.
And
so all of that, and complaints from clients that call up the insurer directly, and some clients will call up the insurer directly and say, hey, this builder is not doing the right thing. If they get those sort of things in court orders, that will affect their insurance.
So would you some builders, they get across the line, they barely make the second year, and then you can't increase the limit for them, but would you charge them more because it appears that the performance is very inexperienced or not in the most right way?
So the premium is set by the government, so the premium's always the same, but depending on how they perform, it's
not like car insurance.
No.
I got speed before.
No.
I got
if you have fines in car insurance, you're going to get an increase in premium. The insurance doesn't work like that. The premiums are set by the government. What it will stop you if you're not performing well, what will stop you is growth, because they're going to assess your financials and realize, well, you're not performing at a level that we need you to perform at. We might either reduce your insurance, or
you can actually reduce the insurance.
It can be reduced as well.
What's your size of insurance? That's a very sensitive topic.
That's a very good question to ask, actually. And that's a really good question to ask, because that will give you an indication of how well the builder's performing.
On average, what they start from?
It really depends on the builder.
Yeah.
Really depends on the case, but $1 million, $500,000 to $1 million.
Mm-hmm. That's where they start from.
So if a building company's been operating for 6-7 years and they're on $2 million, the question needs to be asked: what have you been doing for?
We've seen a builder company 30 years, only $3 million.
We've seen that, and there's plenty like that, because some of the companies for X amount of years before, they've only been doing small projects, maybe doing development on the side for themselves. That's where they're making their money. So it's not always a red flag, but it is something that can be an indicator of how well a company is performing.
It's very complicated to assess where the numbers come from.
Yeah.
What that means. How did the builder survive? Is it just because they have very low overheads or small team or keep themselves limbo?
Yeah.
And they have their own developments going on as well.
Yeah.
So speaking about the builders going bankrupt like Port Davis now, it's a pretty hot topic, and I get dragged into this because I have clients who got Port Davis project half built. And then, believe it or not, on WhatsApp and Facebook, there's quite a few group
Hate groups.
the hate group or the basket group.
Yeah.
They try to sort things out. So when things like this happen, if your builder really shits hit the fan, half built project, the only choice they have is go to another builder and cope up with higher cost.
Yep.
But there's not much thing the insurance company can do in this place, or.
Well, you've got the insurance. You've got your DBI insurance that will cover you in this situation. So per dwelling, you're covered up to a maximum of $300,000 per dwelling.
To the consumer?
To the consumer, yeah. Mm-hmm. If it's a multi-unit, you're covered for $300,000 worth of defects per dwelling. If it's a single home or a dual lock property, you're covered for non-completion as well.
So for a 1.2 million, for example, unoccupied home, half completed, then a consumer can cope with 300K increase of the difference.
Potentially, yeah.
So that's not too bad. It's just that they have to pay the cash first, and then the insurance company will pay later.
Yeah, so there's a claims process. Yeah. Now, I don't get involved too much in the claims process. It's done directly with the government. But yeah, I mean, the non-completion proportion is only 20% of the original contract value that you're covered for. So if it's $1 million contract value, then it's $200,000 you're covered for non-completion. To get it to $300,000, you need to make a claim on defects as well.
So from my limited experience so far, Gary, I see that for a development project, if I tick all the other criteria, I get the right permit, right location, right finance, blah, 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 get it started to a good price. The only risk I have is the builder risk. And I cannot control it because it's the builder's business, not my business.
It's probably the biggest risk. If you've done your fees properly, your due diligence, the project works, the construction costs works for the feasibility, really, all that's left, assuming that the funding is good and they've come through you, so the funding will be fine, the problem will be potentially the builder.
So how important is that? That they are almost crucial for your, it's almost like a partner.
Business partner. You're a partner for the duration of that project. That's why I said there's no point having a partner that you can't get
don't know
with.
them.
Yeah.
You don't know them enough.
That's right.
You don't know how they make their business. You don't know what they struggle. You also have to stand on the builder's side to understand their business, how they run the business, how they keep it sustainable. That's your business partner. You don't work with someone investing like million of dollars for the person like next to you that you don't know them very well.
And that's why I say you're about to pay this guy $2-3 million. Make sure that it's someone that you're going to like,
yes,
and that you can work with, because $2-3 million is a lot of money to pay someone if you don't like them.
Yes, yes. And when things get pear-shaped, you have to do something to cover yourself as well. TriParty Agreement.
Yep.
What's your view on that? That's like a headache for all the project manager, for builders. But when more and more lenders are asking for TriParty Agreement.
So TriParty Agreement with a project manager. So bank
with the lender, with the builder, and with the developer.
I don't think there's any problem with that, right? And I don't think anyone should have a problem with that, because at the end of the day, the bank is calling it. The bank wants to give the money to you, the developer. The builder, you want the money from the developer, all wrapped up into one. You're all responsible for each other.
There's three partners.
Yeah, you're all responsible for each other, right? Fundamentally, I don't have a problem with it.
So we have a case where the developer's cash flow got problem, and then the developer get kicked out of the process.
Yep.
The lenders call, they put in more money into the builder, and the builder putting a bit more money as well to complete the project.
Yep.
At least the project complete. And whatever is left, then they give it to the developer.
Yep.
But what if in another scenario where it's the builder go bankrupt?
Yeah. We've seen that happen before.
Yes.
We've seen that happen before. Again, it comes down to picking the right builder.
Yeah.
Right? I think this whole process of picking the right lender, the developer, and the builder, these three parties have to get along well and all have to stand up and do do their job, right?
Mhm.
So critical. It all comes back from a developer standpoint. It all comes back to picking the right builder. From the builder standpoint, also it comes down to picking the right developer because
So
sometimes
mutual selection.
the developer and the builder. I've got one case at the moment. Builder is a great builder, good friend of mine. Developer, great developer, friend of mine. I introduce them. They're looking at their projects together. Unfortunately, the project's not going to work from the builder side. So should the builder continue because they're friends now?
Yeah.
Or should the builder make the difficult decision to say, I still want to be your friend. I still want to build for you maybe in the future, but maybe this project is not the right project for me.
Yes.
I think
But that's still a good project for another builder, perhaps.
it'll be a great project for someone else,
Mhm.
but for me, it might not be the best project for me. But it's a very difficult conversation to have
Yes. Yes.
for a lot of us to say, oh,
They're not
you.
obligated to
Yeah.
build for you all the time.
I like you, but I might not want to work with you for this one. It's a very difficult conversation to have.
It's art and science to select a right builder and right developer. Actually, I heard a lot of feedback from the market say, "Oh, it's very hard to find a good builders nowadays." But I also heard this feedback from the builders say it's very hard for them to select a good developers who can understand their side.
Yeah, so I get the same thing. So what I help developers with, helping them find the right builder, I get the same thing from the builder back to me. So I get builders that call me and say, hey, I've heard of this developer. They've got this project. Have you encountered them before with another client? Or do you know who they are? And can you give me some tips about who they are?
So your market reputation is very important. Make sure that your everyone
Absolutely.
around you for all the project, they have earned the money and they have earned the satisfaction out of it as well.
It's a very small market, right? Especially if you're especially in this kind of eastern suburbs sort of area. Everyone knows everyone. Everyone knows everyone's business. So
the tradies, they move around to different sites. They know other builders.
Actually, they're actually tradie Facebook pages.
Yes.
That talk about builders
who didn't pay them on time.
That's right.
Who didn't treat them very well. Not professional. Not respected.
That's right. I'm on all of these pages because it's very interesting for me to get on the ground feedback from the trade level about who's paying which builders are good builders they work with. Sometimes I see some of my clients in there, and sometimes it's good, sometimes it's bad.
You're probably going to change name on Facebook. If you were to go back to 10, 20 years ago, or maybe when you're 18 or 21, just start your career, with the advice and experience, and the wisdom you have today, what kind of advice would you give to that young Gary on the time?
I'd say you can have fun.
Yep.
Which you were having.
Yes.
But you should buy your first property ASAP.
ASAP. And there's no right or wrong property to buy, like apartments, townhouse, house and land, any?
Honestly,
yeah,
it's always been my opinion and the advice that I give a lot of 18, 19, 20-year-olds now looking to buy the first place. Buy whatever is right for you at the time. So if this was me giving my advice to me at 18 years old, go and buy an apartment in the city. You can still have fun, but at least you're paying off a property.
So start early, get into the game early.
Yep.
Don't worry that you make the mistake or not. It's your experience. It's something that they can never taught on the textbook.
Yeah.
And also you have your focus, you're paying that mortgage, you are thinking for your future.
You're building an asset.
You're building an asset.
And
there's no perfect house to buy.
And I don't think there's no such thing as a wrong asset either. To be honest, my oldest asset, I would consider to be my most failed asset. I bought it over 20 years ago, and it's actually gone down in value in the capital.
Are you making positive cash flow?
In this market, it's actually gone down in value, but cash flow positive gearing the whole way. So if you look at capital growth perspective, I've lost. But if you look at cash flow perspective, I've gained. So
that's positive cash flow, prepare for your retirement.
Yeah.
And you make that into a financial product.
That's it.
Yeah. Thank you very much, Gary.
No
Thank
problem.
you for your time. So the audience and everyone, we have made a couple of community for you. If you want to get into property and then you want to learn more about other people's success, wisdom, and then mistake you should avoid, welcome to subscribe my book, Retire on Rent. That's what exactly Gary's doing. He got an amazing portfolio I couldn't disclose, but he got amazing experience you can tap into as well. We have a lots of top 5% of all the niche markets expertise that we are continuing the interview for, and some of them we will create workshops for you as well. The second community we are creating is for property developers, where the investors they want to step up to the more advanced level and then take up more risk, and then of course chasing more profit. So stay tuned, subscribe, and I would love to see you next time.